Clover stock because it has been getting hammered over the past 5 days. Just today it's down by 12%. Over the past 5 days, down 21%. It's actually at its 52-week low, so we can see it at $5.55. Since inception, it's down by 44% all time after reaching highs of over $20 per share. Okay, its 52-week high was $28.85. So that's a huge loss for investors who invested near that peak. And we're going to talk about exactly why Clover Health is at such a low stock price. So welcome back to another video. My name's Adam. On this channel, we talk about stocks, my portfolio, as well as investments such as cryptocurrencies and investing and saving money. I believe now could be a good time if you're a very risk-prone shareholder, if you can tolerate lots of risk. Right now, it's trading at close to half of its pre-SPAC price of $10 a share. It started at $10. This was a SPAC backed by CLOV, or Chamath, not really sure how to pronounce that. And since then, it has basically had quite a volatile ride, like most SPACs do. And now it's reaching its lowest points at $5.64. I went ahead and bought a couple more shares, but it's still down by about I think 20% on this position. My average price is $8.40 or something like that. So right now, $2.37 billion market cap. Revenues are expanding rapidly. The only reason why this stock price is down, I mean, among many others, are when they issued new shares, like 55 million shares at a price of I think $5.75, and they issued like $300 million worth of those shares. And on top of that, they're a loss-making company, but they have 600 million, at least in terms of September terms, of cash and cash equivalents. So it seems like they're raising more money needlessly, kind of, because they have so much cash on hand, but they're adding another 300 million. So they already had 600 million. You add another 300 million. That's $900 million worth of cash. That's basically they have on hand to fund like future growth potentially and like administrative costs. We're going to take a look at that move. But yeah, that's the main reason why the stock is down. I mean, one, it's not making any money just yet, and two, it just issued more shares, which dilutes shareholder value, sending the stock basically plummeting this past week by over 20%. So as we can see here, at least on the RSI and the Bollinger Bands, this red candle is where the stock is currently, and that is way oversold, way below the lower Bollinger Band. And I mean, again, when stock approaches a 52-week low, you know that something is up. And I mean, now if you're a value investor potentially, and even you can tolerate risk, now is the time to start accumulating shares. But of course, do your own due diligence. Don't take advice from me personally. This is just something that I believe in. If you want to get bargain stocks and potentially get huge upside, you got to look at buying the dips basically. So Clover Health announced pricing of 300 million upsized public offering of Class A common stock. The aggregate gross proceeds from the offering are expected to be approximately $300 million, and at a price of $5.75 per share. Of course, right now they're at $5.66, so even under that price right there. And has granted underwriters a 30-day option to purchase 7.8 million additional shares of its Class A common stock at the public offering price, less than the underwriting discounts and commissions. Oh my goodness, that is, why do they need so much money? I don't understand that. They already have 600 million, which we're going to look at. You look at their past quarterly results. Down here, they actually say cash equivalents, and investments totaled 588 million as of September 30th, 2021. So sure, because they needed to fund their expenses and because it's still a loss-making company, maybe this has gone down by 80 million or at max 100 million since September. So I just don't understand why they need more cash. Okay, I mean, the past net loss was Q3 2021 of $34.5 million. So I mean, I just don't understand what, they lost money, but they have a lot of cash on hand. So we're going to take a look at some of the positive results after. So yeah, that's basically the reason why the stock has been dropping. On top of that, they do have decent revenue growth projections for the current year, 115% to average estimate of 1.45 billion revenue growth. Next year, 2.64 billion revenue, which represents 82% revenue growth year over year, which would be huge for a company that's basically has a market cap of 2.37 billion. That would be more like a price to sales ratio of basically 1, of less than 1 actually. So like, wow, that's, you know, the average analyst rating right now is $8.80, and we can see the current price is $5.65, so well below even analyst price targets right now. And there has been a lot of downgrades, but still, like, you know, the average analyst estimate is $8.80. So again, like, you could potentially, you know, buy the stock and potentially play the upside, especially since technically it's oversold. So this could even be a swing play if you're not looking to hold Clover stock long term. And if, again, just looking at their Q3 results, total revenue was up 153% year over year. Lives under Clover management are increased 125% year over year. Gap ratio improved by 150 basis points, and et cetera, et cetera. So, I mean, they've had good quarterly results. They just need to turn that revenue into a profit, which is obviously hard to do. I think they're spending a lot of money on expansion costs, on marketing. But, I mean, they are sort of going right up against like those health insurance premiums and those plans that are making Clover Health like competitive to people and to doctors, especially as the US is growing in terms of its aging population. So, I mean, I think it could potentially be a good move to, like, if they're at least investing this money properly. I mean, if they're like investing this money or raising this money to compensate their own board of directors, like, you know, that's not nice. And a lot of people on the message boards are not very happy because they're down by like 80+%. So yeah, you can also take a look at this article, and it has basically been a meme stock, highly shorted meme stock too, like 30+%. We can take a look in a little bit. So investors view secondary stock offerings as bad things because they increase the number of available shares and they dilute the value of the stock. Essentially, selling more shares destroys value for shareholders that already own the stock, and that's the main reason why it fell 10% and why it may fall even further. So if we were looking at stats, you're looking at something like the share short. It's actually at 6% right now, at least according to Yahoo Finance. It used to be a lot more than that previously, but yeah, like 6% share short is not terrible. It's not great, but I mean, there's not going to be like a short squeeze anytime soon because, I mean, 7% short interest is not a lot. So let me know what you're doing with your stock, your shares of Clover. I'd appreciate a thumbs up and subscribe if you haven't already. Check out other videos on Sinofsky stocks. Check out all the Discord, and that's all in the link below the video. So cheers, love you all, and have a fantastic day.